This is Bruce with RI Diversify, going over a new strategy for you all today. This one's called the EMA over and under. The EMA over and under. All we need is two indicators for this. Starting off with just candle settings, normal candles, and we're doing the M1 time frame or 1 minute time frame. Trade time is 5 minutes. And all you need to do is to add two things: a moving average, and the moving average settings are as follows: 21 for period and EMA for moving average. And the style settings can be whatever you choose them to be. And lastly, the stochastic oscillator, which will be set to defaults. So once you plug it on, the default settings are sufficient. Now, the way that you operate this strategy is pretty simple. During an uptrend, this strategy is basically, hugging the trend and following the trend. So whenever there's an uptrend, you want the candles to be above the EMA, okay? Not hugging or touching the EMA like you see here in the middle. They have to be completely above the EMA for uptrends. Additionally, the stochastic oscillator will also need to be crossing and going up. So the blue line needs to be crossing the orange, going upward for a proper signal. And on the opposite side, for a downtrend, you want all of the candles to be below the EMA. And a proper signal for that would be, as shown here, the blue line crossing the orange going down. Okay? And the moment you see that cross on the uptrend side or the downtrend side, you want to enter in a trade for 5 minutes. Okay, so now we're going to look for an ideal situation to employ this trade or to employ this strategy. I'm going to look around and see if I can find one. Looking around, looking around. It looks like I just missed this one. It just crossed. So again, this is an example of what not to do. Never enter a trade after the cross has already happened. Okay, it can mess up your timing and you could get caught short in the middle of the trade. So always enter the trade once you catch the cross occurring. Don't try to be slick and go in afterwards. Okay. This was a nice shoot. I'm gonna go in anyway. Real nice shoot. Let's see what happens. Now, if it fails on me, then we know why. But if it succeeds, then we'll just take it with the 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 notion that the trend was really strong. The push was pretty strong. Now, this is only for the patient traders. If you're looking for like a quick trigger strategy that you don't have a lot of time to sit in front of the screen, or you don't even have to sit in front of the screen, but if you don't have a lot of time to wait for trades to complete, then this may not be the trade for you. But the most profitable traders are the patient traders. So keep that in mind when you're trading and you're thinking about strategies to employ. Um, I've provided a few profitable strategies, but the best ones are the ones that require patience and observance. So keep that in mind when you're formulating your trading plan. Got a little while longer. Fingers crossed. Now, another reason why we're going in for this duration of time, going in for short periods of time, oftentimes the trend can change direction. So you don't want to try to shorten the strategy by going in for quicker time periods. It may work. It may be to your detriment if that happens. I suggest you continue to follow the 5 minute time frame suggestion for the strategy because this will allow the market to breathe and this will allow you to avoid any quick changes that the trends may do along the way. This is a prime example. You see how these dojis are forming and they're going between, the buyers and sellers are having a fight right now. So if I were to try to shorten the strategy to try to make a quick buck, very well could have been on the losing end. So follow my instructions and you'll be good. And some may ask, well, are there any specific conditions that you need to consider about looking at the stochastic, whether it needs to be in a particular area? Um, I would say no. If you're, as long as the candles are below and above, as I suggested, and they're crossing, going in the direction of the trend, not going in a different direction, then you should be good to go. But make sure that you catch it on a clear cross. You don't want to catch it on like you see now, the stochastic at the bottom is doing this little Twizzler thing, this tangle shoestring thing. You don't want to enter at those moments because you're already too late. You have to enter on a clear, concise cross, no exceptions. And I caught this one late, so going against my own gut. But looking at the strength of the candles going down, those long candles, long, strong candles, those are good signs. In addition to the fact that the stochastic was also pushing down pretty strong too. You saw that quick shoot down of the stochastic when I entered the trade. So that was my notion to go ahead and go in. Aside from me saying don't go in late, it was still pushing down pretty good, and we won that one. We won it all because we followed the trend. Okay, so that's the strategy. Pretty straightforward and simple. Again, I'll summarize. This is called the EMA over and under. Uptrends, you want to make sure the candles are above the EMA and that the blue line is crossing the orange line going upward. For downtrends, you want to make sure that the candles are below, completely below the EMA. It doesn't have to be, I mean, the lower the better, but it has to be under the EMA, not dangling in the middle. When it's under, you want to make sure that the candles are crossing the blue. I'm sorry, the stochastic is crossing. The blue line's crossing the orange going down. And the time frame is 5 minutes. That's pretty much it. Give it a shot. Get this money. This is Bruce signing off.